Hello, everyone. I hope you're doing great today. You have an awesome trading week going on with you, with all the pandemic going on. Um, I wish you're spending more time with your family, and your family with you are all in good health, because this pandemic is going viral recently like wildfire, you know, affecting a lot of countries and a lot of family as well, having losses. And I've been in my house lately for the past, I think, 1 to 2 months without going out because of this. And I'm happy I'm doing this because it's permitting me to work harder, to learn more and more, and to do this for the people that I'm teaching, and give you some good resources in order to learn, right? So today, what we're going to learn is how to grow a small account without high risk, right? So what you need to do is do not rush in making massive gain in neither pips or return. I think I already explained what pips are. If you have not, then you need to go back to the previous video, and you're not supposed to be here right now. So I appreciate if you go one step at a time. If not, you will get lost, and I don't think any of these things right now will help you. So what do we mean by do not rush in making massive gain in either pips or return? Because you're just from learning all these strategies, right? So you will not be able maybe to control your emotions, or to be patient enough to see the movement go to the direction with which you're expecting the trades to perform. So um, most of the time, yeah, you get the African background of the cock curling out back there. So most of the time you see in fact, most of the time I'll advise the new student to take anything out of the market, anything, five, and anything like 10, 20 pips, anything, right? Because you will never go broke taking profit, but you will go broke if your stop loss are getting hit all the time. Like, so when you say do not rush in making massive gain, means any little thing you take, any little thing you do, pardon, take it for a start, right? The objective is to be your account, is not to go for the massive move, is not to go for um, a big movement. You heard? So that's what I mean. Do not open yourself to large risks in hope of getting large return. Yeah, that's the next. You see, people most of the time they think risking a lot will give them money a lot as well, right? And those are the people that come into this market with a get rich mindset, like they want to get rich quick overnight mindset, right? That's not how it works. The objective is to double your account within a week or a month or a year. Let's say you have $1,000 account and you follow what I'm telling you. By the end of the year, you double it to 2,000. I know it might sound crazy, right? It's too long, but I don't sell dreams. I'm just telling you things that probably can happen, right? I will not tell you take the $1,000 to $500,000 in the space of 1 month. No, I tell you things that are probably to happen. Even though if you apply this very well, you can still make 1,000 to 10,000 in a week or in 1 month. So it all depends on you. But I say if you have $1,000 right now, where will you be 10 years from now if you do the risk management that I'm telling you, that I'm teaching you right now? Because forget all the strategies, forget everything. This is key, right? This is key. If you know how to manage this with any strategy, you can grow your account, you can make money, you can be rich 10 years from now. 10 years from now, you're going to be massively rich, right? So do not open yourself to large risks in hopes of making large gains. Don't over leverage because you think that if the market goes to your favor, or you'll make a massive money as well. No, don't do that. The next, do not assume small risks will not grow your account. Most of the time, people think that um, or taking maybe mini lot sizes or micro lot sizes will not grow your account. No, they grow your account gradually and more than you even think without even affecting you either physically, psychologically, or monetarily. They won't affect you, right? Because if you use a mini or a micro lot size, if you hit your stop loss, you won't get that affected as if you use a standard lot size and it hits your stop loss, right? So that's the mindset you're trying to build as a trader. You're not trying to come over here and just get rich all of a sudden like that. No. So most of you assume taking small risks will not grow your account. It will grow your account. Definitely, you'll see the results in a month or in 2 months. You'll see. If you apply all what you've been learning or from the past classes that I've been sending to you, if you apply them gradually, yes, you'll be learning a lot and you'll be compounding your account. And you get up one day and see maybe a $1,000 to be 100,000, and be like, wow, this is awesome. If you do what I'm asking you to do. The next is do not sacrifice trading equity for poor planning. Yep, there are people that maybe you put a trade into your account and you're in drawdown, you cannot hold it, and you want to look for another trade. Seeing very well that your equity will not permit you to take another trade, but you'll go and still take another trade, which will eventually, if it reverses, is going to blow your account. But just because you're in a drawdown, you can't face the pressure, and probably you're in that drawdown because you over leverage, which means you can't take the pressure of you losing that amount, and now you want to recover it probably with another trade, and now you go and take another trade with another leverage now without maybe without even looking at your equity, and now boom, it blows your account. Be like, oh damn, how am I gonna do this? Trading doesn't work for me. You pack the things and keep. Nah, no, that's not how it works. Trading worked for you, but you just didn't do the proper risk management that was required you to do. You know. And next, what you need to do is what you need to do, what you need to aim for. Uh, Determine how to anticipate a risk to reward model. Determine how to anticipate a risk to reward model. What do we mean? You need to have a risk to reward model. Like if you are taking this trade, what is your risk to reward? Are you ready to lose 20 pip to gain 20 pip, or are you really ready to lose 20 pip to gain 40 pip, or are you ready to lose 20 pip to gain 60 pip? That's what we mean. The next is learn to respect the risk side of the trade setup more than its reward. Most of the times, 9 out of 10, we are more interested in the money we are going to make than the money we will lose if it hit our stop loss. But I'll bet you that if you focus more on the money you're going to lose, or on the amount you can lose if you hit your stop loss, one, you will make you not to over leverage. Secondly, you will take trade without having pressure in your mind, and thirdly, you will grow your account very, very quickly without any stress, because you will not over leverage. You will not uh, you will respect the risk side more than the money. You will not be too greedy into the market, and as a result, it will help you a lot in developing your account in one way or the other. And you're gonna see that because I'm gonna show you some examples on the charts, right? With the setup and all the teaching I've been teaching you, I think this is gonna take you to a whole other level, and I hope it does, right? Identify trade setup that permits 3:1 reward. 3:1 reward. Yep. What do I mean? Like I was saying earlier, the trade setup should be at least 3:1 reward. That is, if you're willing to lose 20 pip, as I said before, your take profit should be 60 pip, right? If you are willing to lose 40 pip, if it hits your stop loss, your take profit should be 120 pip. That is, your take profit should be the 3:1 ratio, right? Let's say you take a trade, right? Yeah, okay, let's start like this. Most of the trades you take, you are 75% profitable. That is, in 100% trade, in 100 trade that you take, you are 70. Yeah, your trade that you're always profitable at 75. Let's say you have only a 1-to-1 risk to reward. That is, you risk 20 p for 20 p. Do you know the amount of money you'll make in the next 1 week or 1 month? That's crazy, right? If you do only a 1-to-1 risk to reward without any stress and anything. And now, what about a 1 to 2, a risk to reward of 1:2? That is, you're risking $20 for $40 now. You know how massively you can grow your account within, if you're taking 75 trades. Like, let's say every week you just have 3 trades every week, and for 1 month you have maybe um 3 losing trades or 4 losing trades. Do you know? And every week you take 3 trades. Do you know how massively you can be your account with a risk to reward of just 1:2? Because even if you hit those stop loss, you will still be profitable, because why? You lose only 20. You lose only $20, right? Or you lose only 20 pips compared to the other 40 pips and or 40 pips or 10, 20 pips you've been gaining. So it will affect you in no way, right? But now check this out. What if you get now a 1:3 risk to reward? It's amazing, right? It's amazing how you can go a $1,000 account to 10,000 in a week or in a month, right? Now you can do that if only you know how to manage this thing very well and you have them to your fingertips. That's when you can grow such an account amazingly in the space of 1 month. So like I said, this is key. You might see this, I might be talking a lot, you might be sounding sleepy, maybe you're out of your job, you're 9 to 5, you're tired, or you think I'm blah blah blah, I'm not showing you charts, I'm not showing you this, but this is key. If you master this, then you have just one trading strategy. I think you are good for the forex industry and you'll be making money on your own, right? So imagine that setup. Okay, let's still put it this way, right? You have 25, you just have um, 25% accuracy in your straight setup, right? Do you know that with a setup of 1:3, let's say you have 25%, then the rest of 75% you are still losing trade. Do you know that just with 25% accuracy and with a risk to reward of 1:3, you will still end up being profitable? Why? Because those 75% stop loss that will be hitting, you'll be making them times 3 on just the 25% accuracy that you will be, and you will still end up being profitable. Take note to what I'm saying and see how crazy it can be. but how realistic it will become. So that's how it is. We'll move to the next now. Frame good rewards to frame good rewards to risk setup that have little impact if unpredictable. Like the same thing we're telling above, your setup should be in such a way that if your stop loss hits, if your stop losses hits, you won't be affected that much. Maybe you were not your mindset will be at ease, you will not have any stress losing the amount of money you lose, other than over leveraging and if the market hits the stop loss, you'll be like, damn, I did this, I really fucked up and stuff like that. So yeah, that's it. Right. So those things I'm trying to explain to you are factual things. Listen to this video, listen again and repeat again, even 3 times, and make good use of these points because this is what is going to put money into your pocket. This is what is going to put an end to your 9 to 5. This is what is going to take you to a whole other level. And I'll be honest with you, when I was learning, I neglected this thing. That's one of the reasons why I keep growing my account. Yeah, because when I was still learning with my mentor, I still blew up some account before I came balance. Before I balanced up, but I blew up like 10 account before I even meeting my mentor, and I still blew up like 2 to 3 account before getting on my grinds. Right? And I blew up those account because I neglected these things. I was like, this is just noise. It's just wasting my time. I want to be seeing chart and stuff like that. But at a certain point of time, he asked me go back and look at how to hold at a small account without high risks and master that. They're gonna change. And I was like, damn, all this teaching that has taught me, that's all you can tell me to go and do. And I went back, I read one phrase after the other, and then I started to understand and assimilate the things that he was trying to make me understand. And I was like, wow, this is crazy. I just wasn't patient enough, really, you see. Or I just didn't put the time enough or required for it or to take me to the next level. You know what I mean? So yeah, let's go on the chart now. Let me show you what I mean by risk to reward trades, right? Right. Okay. We regarding what we teach, what I taught you people on the previous classes, right? If you see things is a pretty good buy scenario here, right? Using the Fibonacci, giving us an optimum trade entry. And yeah, we see this everywhere. Optimum trade entry here, right? If you are taking a trade and you be like, okay, this is what you want to do, this is your stop loss, and your take profit maybe should be the previous high, or this previous high, right? Normally, you said our take profit should always be our previous high. So you know that if this market is bouncing off this level, it will be probably to reach back at the levels of those previous high before dropping, right? Now you see one good setup like this, you already have like I think this is almost a 4:1 risk to reward because check this out. I love this African background with this files and curling and shit. So, yeah, you can buy this shit for anything, man. Africa is great. I like it. So check these peeps, right? Let's count this. Our stop loss is oh, this is crazy. Our stop here loss here is just 10 pips. Our stop loss here is 10 pips for 60 pips. You see, this is a 1:6 risk to reward, right? See, just on this trade. Now, now, let's say you took the trade here. Now, when you move this like this, first 10 pip, first 20 pip, which is the previous high of this level, it moves 21 pip. You take part of your profit. Maybe you use a 0.10 lot size. You take, let's say, 1/4 or 3/4 of your profit, right? Or let's say you take half of your profit here, right? And now you move your stop loss and press it to break even. That is where you took the trade at the entry of your trade, right? You leave it now for the market to rock. Now it's here. You're still here. You took half of your trade, half of your profit already. You bank it into your trading account. Now you're expecting the market to move to this previous high, right? You already have 21 pip now. You see the market, boom, it goes up. It goes up. That's already, we are already at just this 20 pip is already 2:1, 1:2 to reward, risk to reward. So you're already banging something. Now you see the market, boom, previous high, 40 pip. You're already at 4, at the risk to reward of 4:1:4, pardon, right? Now you see, go explosively 68 to the previous high of 70. Like I said, you will always go 10 pips above to look for liquidity before probably dropping. But you see, when let's say just made 70 pips, make 1:7 risk to reward on just a trade, right? What if you have trade like this and you do just what I said? As you move, first of all, you go to the first previous high, you take partial of your profit. Now you go to the third one, you move another one, and you put your stop loss into profit or to break even. Now you want to see the market continue above, right? Even if it reverses, it hits your stop loss, you are not losing. You can still enter back the same position, hoping that it goes back up with a direction in your head, right? What if you have a setup like this, just 3 a week with a risk to reward? This is a 1:7 risk to reward with a risk to rate of just 1:3. Do you know how amazing you can grow your account with it? Astonishingly, you're gonna grow your account massively with it, following what I tell you, right? You might not see it now, but it's going to be mind blowing. I'm telling you, this is going to be mind blowing. So I'll plead with you or implore you, just follow all the teaching I've been giving you. You see, I still use this entry off of the Fibonacci, off of this little swing over here. You see this little swing over here. This is what I took off the trade. We have our optimum trade entry at the 0.786 level, which week into we took out the previous high, and the previous high was our target over here. You see, that's just how it is. Trading can be very simple if you do the right thing and give yourself some rules and regulation you need to follow no matter what. No matter what the market is doing, you're not going to be tempted enough to fall into the traps of the market, because most of the time the market is trying to trap you, it's trying to test you, it's trying to see what you know what you're doing. And once your broker know what you're doing, they'll be like, wow, this guy no really knows what he's doing there. So they know they can't eat your money anyway, so they'll probably be contacting you for some partnership and stuff like that. So yeah, that's what it is for today. And thanks for watching, and I wish you a great day and a happy moment with your family.